Hi everyone, my name is Simon Misiewicz from Optimise Accountants, and I want to do another interview, this time around buy-to-let mortgages and coronavirus. We all have questions as landlords, property investors that have mortgages. What do we do when tenants don't pay? Is there a holiday payment? What does that mean in terms of the financial crisis and our credit rating? All these questions need to be answered. Now, we're not going to get every answer from this interview today, but I do hope it's going to give you a bit of an insight. So I've got the pleasure of being able to interview yet again Sekipan from Natu Finance, which we've already done one interview before. So do check out, there's a link appearing above my head right now. So do check out that video talking about buy-to-let mortgages as a landlord. But today, of course, we're talking about COVID-19 and coronavirus. So let's kick off then, Sekipan. Just introduce us to yourself, and indeed, let's go with some highlights in terms of what you are seeing as a mortgage broker.
Hi, Simon. Thanks for interviewing again. Nice always to catch up with you and your audience. In terms of a brief introduction, I'm a mortgage advisor, been so for the last 16, 17 years now. Predominantly into mortgages and related services, such as protection and everything that goes around with it. In terms of what's happening today, a lot of clients are concerned. Of course, there is health concern, and then following it closely is the concern on financials for each client. We're having a lot of clients worried about what happens to their mortgage, given that their income, be it income from employment, self-employment, or even landlords where tenants are struggling to make payments. We're having a lot of these calls in terms of what are my options, what can I do? So we're a bit busy from a support point of view. From a new lending point of view, the whole industry is on a standstill. The lockdown means they can't do in valuations, and the government is also advised against home move these days. So there's no viewings, there's no new purchase of property. Even remortgages are significantly impacted. The only area which seems to be all right so far is the product transfer, where clients continue to stay with the same lender, and all they're doing is just changing the product when they come to the end of its initial period. Apart from that, every other business has been significantly impacted. Many lenders have withdrawn from the market, although there are some lenders doing some business. The ones that have really been affected are the higher loan to value, lower deposit scenarios is the ones that the banks are taking a back step from, because they can't do the automated valuations in there. But otherwise, it's support calls helping people who've got various problems because of Corona.
So there's a lot of information there, and I think it's good to have that as a highlight. Let's start talking about some of the specifics that we are seeing. So clearly you've got the tenant on one side, the landlord on another, and whatever it might be, but the tenant cannot afford to pay the rent. The landlord, let's imagine that they are dependent on that money coming in through the door. What is their options in regards to their buy-to-let mortgages? I've heard this thing about a payment holiday. Clearly, some people are taking that as in the wrong way, that they don't have to pay it.
Yep.
From your perspective, what is this payment deferment or payment holiday that people keep talking about?
Yeah, you use the word payment deferment. I think that's a better word rather than say mortgage payment holiday. That's turning out to be a very popular option, which basically means that the clients can pay their mortgage monthly payments at a later date. Now, interest will be accrued on the mortgage, so it's not like it comes free of cost. So if whatever is the interest component of the mortgage, that will be added to your loan, how many ever months you're taking the holiday. Initially, it's been set for a period of 3 months, but the FCA have said, depending upon what happens to the virus and what impact it will have to the client, they may be willing to consider this for longer, but only time will say if it's needed and if it continues to be the best option. But in simple terms, you're deferring the payment, not making a payment now, postponing it for the future. Most lenders have said they will not extend the term, and they expect the clients to make a higher payment once the payment holiday is completed. So we have a lot of clients calling in us to check what would be their higher payment depending on their individual numbers. But you will need to understand that this payment needs to be made later on. Initially, the lenders were quick to come back and give mortgage payment holidays for residential mortgages. I would say most lenders were reasonably quick with the buy-to-lets as well. But Barclays, who's a main player within the buy-to-let industry, had their own technical issues. First, they said they are not yet offering, but they've now come back and said they are offering mortgage payment holidays. They had IT issues on doing that, but that's being done. So mortgage payment holiday is being popular, where the clients have the option to postpone the monthly mortgage payments to a future date. But the question still remains as to how and when these will have to be paid.
And typically, in terms of the payment deferment, let's call it that, as you mentioned earlier, how long is that payment deferment? Is that 3 months, which I've heard in the tabloids, also in the government news? But could that deferment be longer than 3 months because we don't know where we're going to be in 6 months' time?
It's a good question. The initial offer that the Chancellor announced himself was for a initial maximum period of 3 months. So if you wanted less than 3 months, you can still take it. But they will review the situation depending upon what happens to the market, how long the lockdown is going to be in place, and whether FCA is going to take a call to see if mortgage payment holidays is in the benefit of the customers going forward. And based on these parameters, they will extend it if needed. But there are lots of ifs there in that statement.
Yeah, so a great uncertainty, I guess. In terms of we talked about deferment of mortgages. Clearly, we know that if you go for a mortgage, you have to have some sort of credit reference being taken, whether that's Equifax, Experian, or various number of others. In terms of the credit rating, could this deferment have an impact on you getting future mortgages in the future because you have taken this holiday period or deferment period?
That's a good question. I mean, most of the mortgage lenders, when you take the mortgage payment holiday or on their websites, have said this is an agreed deferment or an holiday, which will not affect the credit score. But I always tell clients, each lender is unique. While you do that, check with the lender in question to ensure that this will not affect the credit profile. I did a research when this come back, and about the top 20 lenders, all of them had categorically said this will not affect the credit rating. So from that perspective, as long as you've got it agreed with the mortgage lender that it's a mortgage payment holiday, then that will not impact the credit score. One cannot assume that I will not pay it, not speak to the lender, just not make my payment. In such circumstances, it is bound to affect the credit rating. But once we've sought permission and got that in writing from the lender and we don't make a payment, that's not going to affect the credit scoring.
Okay. And from your side of things, there are always opportunities in life. Is there an opportunity from your perspective to say, well, actually, even if you don't need to take the payments holiday, take it, because the amount of interest that you might be paying is so low. If you can get a better return on your money in the short term and then pay back the deferred payments, is that an opportunity, or do you think that's too risky, don't do it?
It's a very good question, but I wouldn't say it's a blanket rule to say everybody just take it because it's available. For one, you need to pay it back, so it's not money for free. And two, it's not the right. I mean, one would suspect if this is the right time to invest. So even if somebody is looking to invest in property, it's not going to be the right time because the whole estate agency and the property market's closed. If there is a good opportunity cost, and you think you can put this money better, I wouldn't know at this stage as to what those would be for any specific client. But generally, the rule of thumb is do not take it just because it's there. Take it only if it meets your personal circumstances, and that's how it's got to be done.
Okay, so that's, I think, in terms of the landlord-tenant subject, I think we've covered that off nicely. Let's just explore now the topic of buying and selling a property. There is obviously going to be uncertainty right now. You may be halfway through the purchase. From your perspective, first of all, are there inevitable delays because we're going through exchange, but we haven't gone through completion yet? From a mortgage perspective, I guess the mortgages should have all been checked out and cleared. But is there a risk that banks will still say between exchange and completion, well, actually, we're pulling the plug. We don't want to give you the money.
Yeah, so there are a few points that you've covered well there, but between exchange and completion, lenders generally do not make additional checks. It's in the normal circumstances. But today we've seen some lenders saying they want confirmation that the employment for the client or the income for the client is not disturbed. The lender has the right to check for documents right up to completion, because the lenders do not get involved in the exchange process. They issue the mortgage offer, and always the clients are exchanging contracts on their own risk, because if the mortgage lender then pulls the plug, we have the problem. We haven't seen a lot of it because lenders have been considerate to see where they are because of the market situation, which is happening across the board. But the lenders do reserve the right, and one must ensure that it's the income predominantly. I mean, because the credit scores haven't been impacted, at least already for most clients. Again, buy-to-lets, we're not seeing so much of that, but there is a concern that this might impact the residential mortgage when the property market gets back on its feet. A lot of people have taken a cut in the income. Some lenders have said they will take the reduced income into consideration. Other lenders haven't taken a call on it yet, but that becomes a slight concern for residential, not so much for buy-to-let, at least at this stage. Okay. And in terms of what we are seeing is we are seeing chains being broken because one person or the other is not feeling too comfortable given the market situation and they're pulling out. But completions are really not happening. I mean, we've had a couple of completions where these were new build properties that the clients were going into. There wasn't a big chain, and the government has said you can move in if it is needed and the property you're moving to is empty. So we've had a few completions, but the vast majority of them are being postponed. And the only thing most lenders have done is that they've extended the mortgage offers. So there is no concern for the client to say, my offer is running out in a month. If there is still lockdown, what do I do? Lenders have extended the mortgage offers for between 3 to 6 months, but that's where we are today.
Okay. And obviously we saw the Bank of England drop the interest rate significantly once more. Are we going to see a downward trend of buy-to-let mortgage interest rates? And if so, would you suggest that people should look for fixed rate mortgages going forwards?
Very good question. This is another call that we're getting very much these days. Now, one thing that one needs to understand is by the Bank of England lowering the base rate, all those who are on standard variable rates or tracker rates are the ones who get the automatic benefit. But I would say, at least in our books, I'll probably say 95% of the clients are not on these two types of mortgages. They are predominantly where you actively manage. People tend to keep a fixed rate, although trackers or options, a vast majority tend to go towards fixed rates. And if you're already on a fixed rate, unfortunately, the Bank of England rate reduction does not help you. Right. And the other thing that we're seeing is for new fixed rates, there hasn't been a marked difference. There's marginal changes in the interest rate that have gone down. So if you're looking at a 2 or a 5 year fixed rate at this point for the future, then the problem is the rates aren't going down. This is because the Bank of England base rate does not feature in the equation the lenders use to fix their new products. I mean, it's based on swap rates and their margins, which have already been low. What we're seeing, the buy-to-let rates we've seen now are historically low. We've never seen such low rates before. But just because the Bank of England has reduced the rate, we are not seeing any reductions as yet. And we might not see to the extent that the Bank of England has reduced it, because they have brought it down to 10 basis points now. There's not going to be such a big reduction. There could be small and marginal reductions in the future, but nothing significant.
Okay. And in regards to people going for new mortgages, so coronavirus is out of the way, and we're back on the heel, and property prices are whatever they are, whether they increase or decrease, I don't think anyone really knows. But going through a mortgage again, once we are through this process, is that going to be easier or harder, given the equation needs to be 145% or 125% of the mortgage interest and what they expect from the property? Do you think there's going to be a squeeze in terms of the criteria, or do you think it's going to be relaxed after coronavirus?
A good question. there's no certain answer to it, but I don't think there could be a further squeeze on the stress testing. As a general trend, lenders are finding novel and unique ways of trying to play around with the stress testing and make it better for the clients. So even if that doesn't happen, I really don't foresee a further squeezing because one expects the confidence is going to be initially lower once the market comes back on its feet. The confidence from the buyers is not going to be as heavy. They would want to wait and see what happens to the market. So I don't think even the lenders would have a big need to squeeze the criteria further. However, we think the processing timescales can take longer because there is a backlog of valuations and applications in the background. So that can happen. But in terms of how much one can borrow based on stress testing, I think they largely remain the same.
In terms of, I mean, that's a great source of information already. There's going to be plenty of other questions as well. How can people that don't have a mortgage broker, they've been doing it themselves, trying to get through to the banks, finding it's very, very frustrating. What can people do? How will people be able to contact your good self?
Yeah, in terms, I think the need for advice has definitely grown up now because this is a space where lenders are changing criteria and products pretty much every single day. So the need for advice is dramatically grown up. Although most lenders are not open to the normal levels of business where they've restricted the amount of mortgage they would give, especially the loan to values, where they're expecting higher deposit. There are still people calling up to have a discussion to say when things get better, can I be prepared now? And I'm happy to have a chat. We're still open as normal. I mean, just that instead of calling the landlines, people call us on mobiles or emails are always good. So they are happy to reach me out through the website, through emails or phones, and I'm happy to have a chat with them, knowing fully well we might not be ready yet to get into a transaction, but we can talk about a future transaction that they've got in mind.
Thank you ever so much for that. And I will put in the website for Nachu Finance in the description box so you can contact Sekipan to talk about the future. Maybe hold off until the complicated questions regarding your own mortgages right now because we may not know the answer. But Sekipan, thank you ever so much for joining me today. I would also
pleasure to join you. Yeah.
You're welcome. Thank you very much indeed. And don't forget that we will be getting Sekipan back onto the show next month. I'm sure there'll be updates in regards to coronavirus or whether something else has come up. But hopefully it will be a bit more positive outlook in terms of being able to invest in property again in the future. Until then, my name is Simon Misiewicz from Optimise Accountants. See you again soon. Thank you.